Welcome to the latest Motley Fool scoreboard. I'm on in Chock-a-Balloon. We've got longtime fools, Dan Kaplinger and Rick Munaris, giving a 1 to 10 rating to a top 200 stock in the primary hidden gems database. It's Cava, ticker symbol CAVA. First, we'll talk about the strength of Cava's business, including factors like its intensely competitive industry and its competition, right, that I already mentioned. A 10 is invincible. A 1 is hopeless. Rick's at an 8. Dan, you're at a 7.
Yeah, I'm very aware that I'm encroaching on Rick's home territory here. Like, eating out for me is not a very common thing. Eating out fast casual, very rare. But Cava's definitely come on my radar because it has proven itself. It's proven it to be a solid chain. It was smart enough to capitalize on the ideas that Chipotle brought, but to apply them to kind of a high-profile type of cuisine when Mediterranean was really hitting as a lifestyle choice, and Cava's really managed to find ways to capitalize on that. That's why I gave it a 7.
Yeah, Dan, it's a table for two. Be comfortable. Let's talk. I went with an 8. The first Cava location opened in Maryland back in 2011. Just 15 years later, it's at 459 locations, growing and thriving. Taking that Chipotle fast casual assembly line approach, only applying it to Mediterranean cuisine, Cava has been a success. It also sells some of its signature sauces through retailers and grocery stores. Over the past couple of years, we've seen iconic chains including Chipotle and Starbucks dip briefly into negative same-store sales, but Cava so far has been able to keep things positive in more ways than one. One can even say it has a fed-up business model. I guess I just did, but I can't go higher than an 8 because running a restaurant isn't easy and dining tastes do change.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Once again, Rick's at an 8, and Dan, you're at a 7.
Yeah, Rick's going to tell you a really compelling founder story here. For me, it's just that the company's done a really good job of executing on what really, at least to the outside, looks like a very similar business model to, Chipotle kind of paved the way, and Cava kind of said, well, we can do mostly the same thing in a different area of cuisine, hopefully duplicate or even improve on the success. And so far, that's exactly what Cava's been able to do.
Yeah, so Cava was founded by 3 sons of Greek immigrants who were childhood friends since they were 6. They opened the full-service Mediterranean concept in 2006. The restaurant's unique dips and spreads became popular, so that's when they brought in a mutual friend, Brett Schulman, to enter the consumer packaged goods market, selling their signature dips and sauces through retail outlets. And Schulman was CEO of a snack distributor at the time. The 4 of them realized, hey, the concept may work better as a fast casual concept, so Cava was born with Schulman as CEO. He remains CEO today, and just one of the 3 childhood friends remains on the executive leadership team as chief concept officer. On the one hand, the co-founders had limited experience going in, but it's hard to complain with the results. 8.
All right, for financials, a 10 is a fortress, a 1 is yikes, and keeping the trend intact. Rick's at an 8, Dan, you're at a 7.
Yeah, you've seen Cava. It's produced reasonable growth over the long run. It's done so without debt. You've had some pretty modest profits on a GAAP basis. When you consider all the depreciation and amortization that goes into that, though, once you're on an adjusted basis, the profitability looks a whole lot better than what you see on the GAAP.
Yeah, what's really impressive about Cava is that it's gone from basically 0 to 459 locations in 15 years with a company-owned store format. Unlike McDonald's, Wingstop, Subway, that can grow quickly, expanding its reach through franchisees, Cava is opening every location on its own, just like Chipotle. This means a lot more upfront costs and operating expenses, but naturally collecting more than royalties and franchise fees when things go well. It's a riskier and costlier approach, but more lucrative when you have a hit on your hands. And Cava, thankfully, has a hit on its hands. Even more impressive, Cava somehow has no long-term debt. The long string of positive comps means that the average unit sales volume has gone from $2.6 million when it went public 3 years ago to more than $3 million per location today. The combination of positive comps and brisk expansion has delivered annual revenue growth of at least 20% every single year. I'm an 8.
All right, Rick, let's talk valuation. How well will Cava stocked over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, so I'm at 15% plus, I guess the max setting. At the time of its 2023 IPO, Cava spelled out its appealing customer demographics. The average customer was younger, wealthier, and skewing slightly more female than the other concepts. Mediterranean cuisine ranks high on health and flavor, a rare 1-2 punch that helps explains the company's success. Opening 459 locations in 15 years is impressive, but this also leaves so much more runway to cover. This is my way of saying that, like its menu, the stock isn't cheap, but it's worth it. I think it could crush the market from here with better than 15% annual returns over the next 5 years. But it's a restaurant, so even with a lack of debt leverage and monstrous comps at 9.7%, almost 10% in its latest quarter, I can't go higher than a 6 on safety.
Yeah, I think that I'm a little bit more measured in my approach. I'd go 5 to 10% with a safety score of 6. And indeed, just looking at the way that the stock has performed, I'm actually probably gearing towards the lower end of that range. The stock, to me, seems like it is taking for granted the idea that Cava is going to be able to continue its expansion the way that it has before. And we've seen with the poor stock performance at Chipotle that things don't always work out the way that you think they're going to. Even with a good business that has a solid foundation, doesn't always work out as a poor investment. I'm not saying Cava is going to end up where Chipotle is today, but I think there is some risk that it can lose its way.
Cava's delicious. The question is whether it can truly expand to all markets as it currently has too. Thank you to both Dan and to Rick. They've given Cava a solid overall score of 7.2 out of 10 with no top-its. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is DocuSign. Till then, Fool on.